FedEx indicates it may be time to prepare for the economic collapse as billionaires prepare for the apocalypse. We're going to talk about those items and more today. Hey, everybody, you're watching Bull, Boom, Bear, Bust. My name is JJ, back with another here dose of economic reality. As always, please give this video a like to give it a little bit of traction so we can get the word out here to what's really happening, what's going on. And let's go ahead and start right here. Speaking of preparation, we've got Mark Zuckerbucks, Mark Zuckerbucks here. $100 million Hawaii bunker sparks concerns. Now, I've seen estimates that it's 100 million, up to 250 million. Either way, this is a huge investment. The question is, what is Zuckerbucks preparing for? What does he see from his very high perch there above most of us here, above most of the population? What does he see from his bird's eye view that we don't see down here? And it is kind of concerning, but there's other billionaires doing the same thing. The Register put it as follows. Zuck hunkers down in Hawaii to wait out the apocalypse on a remote part, the fourth largest island in Hawaii. It's all very hush-hush. Security guards and cameras watch the perimeter of the 1,400-acre site. A 6-foot wall blocks locals from peeking, and vetted workers are subject to strict NDAs preventing discussion of the work. Why would he be so secretive? You have to sign a non-disclosure agreement just to be part of the construction crew. Wow, so that's pretty interesting. Despite having built his $118 billion fortune on the back of other people's personal data through ad-driven social media platforms like Facebook and Instagram, he is an intensely private person and expects the great unwashed to respect that. Very interesting here. Wired had a write-up here. Inside Zuck's top secret Hawaii compound. Well, it's not top secret. It's all over the news. It's on this channel. What's inside it's top secret. I mean, these people have to sign non-disclosure agreements. Pretty insane when you think about it. What could he possibly be hiding down there? What do you think? Please let me know down in the comments. It's all guessing and speculation at this point. Unless you're part of the work crew and you know, but then you sign an NDA, so you better not put it in comments if you know it here. Let's talk about what FedEx just reported here recently. FedEx shares tumble after weaker demand hit revenue outlook. Wait a minute. We were told Black Friday, Cyber Monday was record spending, right? Consumers are strong. They're spending more than ever. Why would FedEx shares be tumbling on weaker demand, right? So something doesn't add up here. The dots aren't connecting. We're connecting the dots, actually. But these two stories don't add up. Record holiday travel, right? We heard all that. So apparently people just are doing everything else, but they're not shipping as much through FedEx. Could that be it? Or is there something deeper happening? Are Americans so buried into debt that they're finally having to cut back on non-discretionary spending because they're spending so much on food and everything else, because incomes aren't keeping up with the cost of living, because we're starting to see in this economy late payments really start to skyrocket. We're going to talk about credit cards here in just a few minutes as well. The results fell short of estimates. Company's express unit was hit by lower demand. The company lowered its outlook, of course. Okay, so small decline, you may say, no big deal. What's the big deal, JJ? Why are you making a big deal out of this? I'm not making a big deal out of it, but again, we just heard we had record holiday spending. So which one is it? Is it record spending, or is it a drop-off in demand, according to FedEx, according to what UPS told us here recently? So again, you let me know what you think about this down in the comments. Is it a nothing burger, or is there something really to this FedEx outlook? Well, just look at the way things are beginning to unfold. We have car prices that are now dropping. If you see our previous report before this one, you'll see some cars are down over 30%, and it's mostly electric vehicles. And people are seeing this negative equity. They're seeing the debt explode, late payments going up for credit cards, auto loans, the biggest increase in late payments of all time, worse than the financial crisis. People starting to get behind on their mortgages. We see foreclosures ticking up kind of slowly right now, but nonetheless, it is increasing. So people are starting to see the warning signs and they're starting to feel the pinch, in my opinion. But as far as the vehicle prices and more on what we talked about in our previous report, take a look at this here. Tesla drivers had the highest accident rate, BMW drivers, the most DUIs. I wouldn't have guessed that. I would have actually guessed the highest accident rate from maybe Ford Mustang owners. It's kind of the low end. Uh, Hot Rod, is it Hot Rod? I don't know much about cars. I just know my car gets me from point A to point B. I don't know much about them. BMW drivers, the most DUIs. I wouldn't have expected that. Well, yeah, I kind of would, because some people that I knew that owned BMWs, they were kind of raging alcoholics actually. So I just thought it was the people I knew. Yeah, BMW drivers, the most DUIs, with 24 accidents per 1,000 drivers during the period from November to from 22 to 23. Tesla drivers clocked in with the worst accident rate in the U.S. Wow, I would have thought that the electric vehicle owners would have been a little more careful. And with the cost of these electric vehicles, and especially the cost to repair them, and the cost to insure them is really, really high, because a lot of times you can't find a body shop to fix these Teslas. You have to go sometimes hundreds of miles if you're, in a small town somewhere. You can't find a Tesla repair facility in every town, that's for sure. But pretty much every town, unless you're super small, pretty much every town has at least one mechanic. Uh, Body shops in most towns, but not so much for these Teslas and electric vehicles. All right, let's talk about who's getting wealthy compared to everybody else. Americans over 70 years old, hold more than 30% of the country's wealth. And a lot of these people, 70 plus, the bulk of their wealth is in their home. It's home equity. So I guess you could say they're wealthy. They own something. Hopefully it's paid off by now if you're in your 70s. They own something that went up a lot in value, especially these people, if they're 70, they could have bought back in the 60s and the 70s and the 80s. And, this is something that's, I guess, good to have on paper. It's good to look at the paper and say, oh, I'm a millionaire because I own these assets. But yet, you can't really use it now. It's really hard to cash out. You can't really use the wealth, I should say. Of course, you can use the home. But as far as cashing out, it's very difficult now. But even though it's more difficult now with the higher rates to cash out, people are still doing it more. It's increasing. The home equity lines of credit, the cash outs are increasing, even though now is not a good time to do it. Looking back over the past 10 years, just the way rates are right now, rates are kind of high compared to the last 10 years. So pretty interesting that the people over 70 are the ones doing the best. You would have thought that would be maybe the younger people, the entrepreneurs, but we see young people, a lot of them get out of college, they have hundreds of thousands of dollars of debt, and they're not even able to pay off their student loans. Look at just a few reports ago, we talked about 50%. Now there's a couple different reports out, but it was between 40 and 60% of students were not able to make their payments, and we only had 2 months since rather, the return of the student loan payments, just October and November, and already we saw a huge number of these people not able to make their payments. Now, some people say, oh, they have the money, they're just not paying it because they're hoping for some sort of debt forgiveness, because we did already see some debt forgiveness for certain people. So one of the theories is that these people that owe these student loans, they're just waiting to see if there's going to be some forgiveness for them down the road. And we warned about this last year. Remember, we said, why would you want to pay a loan back when there's all this talk about forgiveness? And then you see certain people get forgiven. Right now, it's just certain people under a certain income and other things that qualify, I think health conditions and stuff like that. Why would you pay off or even pay towards a loan when there's all this talk out there about forgiving the debt, right? If you want the loans to be paid back, don't talk about forgiving the debt. You may actually do it. You may go ahead and do it and just erase the debt for some people. but don't put it out there because these people that hear that, they're not going to want to pay it. Anyways, that's how I would feel. I don't have student loan debt. I guess I was lucky because my company that I work for paid for my education. And actually, just was 2016, I've got my degree and zero debt because my company paid for it. It was part of like the promotional process in my company. So I feel blessed, but I won't feel as blessed if everybody gets their debt forgiven. So, I mean, not that I don't want people to get their debt forgiven. And I see a big split in this topic when I talk about this. Half of the people that I talk about this to, including what I see down in comments here from you, from all you, half people say you took on the debt, you took out the loan, you signed on the dotted line, you need to pay it back. The other half says, well, if we can send billions of dollars overseas, if we can let people file bankruptcy from debts that are accumulated, such as going to the casino, buying a bunch of booze, partying, going on vacations, going to concerts and baseball games, football games, sporting events. People can run up all this debt and discharge it. Why shouldn't students be able to discharge their debt as well? I can see both sides of the argument. So the side that says you signed on the dotted line, you need to pay for it no matter what, bottom line, that's it. Well, interesting point, but how do you address all the people that are saying, yeah, what about these people that just go ahead and waste their money, they party, they're reckless with their spending, and they get to file bankruptcy because it's on a credit card instead of a student loan. So interesting either way. Um, Bankruptcy is not the end of the world. I've talked here a few times about some people that I know and actually some clients. Of course, I can't say who it is, but clients have filed bankruptcy and their life really wasn't that drastically changed. They went out and got credit cards almost immediately. One family that I know, some friends, got a mortgage within a year and a half of filing bankruptcy. They qualified for a mortgage, and actually, it made their debt to income ratio look better. Now, that was certainly a ding on their credit having the bankruptcy on there, but when it came to the debt to income ratio, they were looking pretty good because they had zero debt and they had pretty good income. So it's an interesting side when you think about it. It's almost like it's a win to fail, right? You file bankruptcy, you discharge the debt, you kind of gamed the system, right? And some people say, no, you shouldn't do that, but it's legal. There's nothing illegal about it. It's a completely legal process, but yet people frown upon it. Well, people frown upon it because I think the conclusion that a lot of people have is that it's going to ruin your life. You can't get any loans, you can't get a credit card. That's just not true. You can actually still live a pretty luxurious life after filing bankruptcy. I've seen it. I work in the industry sort of, so I've definitely seen it a lot. And we're going to see bankruptcies spike in 2024. Some people say it's horrible and awful, but other people say yeah, it's just the way it is when there's so much debt out there. People are going to have to use that legal tool. It's hell. Georgia woman living in her car after losing Social Security benefits. Wow. So you pay into Social Security your whole life. You finally get to collect it whenever you retire. What is it, 60s? And all of a sudden there's a glitch and you're not getting your payments. Seems like it would have been better just to let people keep it to begin with instead of saving it for them and then going to give it back. Hopefully this is a rare case, but this woman is living in her car. She said it was an issue with Social Security Administration demanding money back due to overpayment. Okay, so they overpaid her and now they're holding back checks to try to collect back on the overpayment. That's pretty scary, right? Because a lot of these people, as most people are, living paycheck to paycheck. The estimates, 62%. I saw a report. I've seen estimates as high as 70% living paycheck to paycheck. So think about this: you're living paycheck to paycheck, and you stop getting your Social Security check. Not good. So she's living in her car, obviously. So, is Social Security a good thing? I mean, is the government the best place to be telling us, how to invest our money and the best place to hold our money, until we're collecting the Social Security. Recent headline: delinquencies are rising, just as we talked about a few minutes ago. Rising delinquencies, credit cards, auto loans, and more. And it could soon get worse. Auto loan, credit card delinquency rates are marching higher. Yes, it's true. And this was an interview with Nomi Prinz there. And she's got her bookshelf behind her. I think she's an author as well. And actually, I think she's an insider. I believe she used to work for the Fed. Anyways, doesn't matter. What she's pointing out here is these interest rate hikes during a time when delinquencies are already increasing. It's not going to be good in 2024. It's being reported now more than it has been in the past couple years because there's so many people feeling it themselves. I think they have to start talking about it much more and actually putting it out there what's happening. But for the most part, business news networks are not talking about a lot of the really bad things that are happening, not just the delinquencies. Look at the bank bailout program, the emergency funding program. The funds needed to keep these banks operational, it's skyrocketing. And this was supposed to be a short-term temporary bank rescue back in March of this year, and it's still going. And not only is it still going, the amount needed to keep these banks liquefied is exploding higher, right? So some big things are happening. Some dangerous things are happening behind the scenes. And I think we're going to see a lot more bank failures in 2024 than we did this year in 2023. Now, will it be a systemic drop and the entire banking sector comes down? It's possible, but I think what they're going to do is just print endless amounts of money to bail out however much need to infinity and beyond, however much these banks are underwater or loan losses. There's a lot of talk about the commercial real estate losses on these the portfolios of these banks, the bonds, the treasuries that they're holding have severely lost value. But if you have a printing press, you can come in and technically buy all those. There's no limit. The problem is there's so much inflation when you keep doing this. When you keep banks propped up, therefore they keep loaning out money, and people continue to borrow, then you're going to see inflation take off, right? So that's the dangerous view. If we see inflation, I'm really more concerned about that than I am some sort of crash. And people often say, oh, you've been predicting a crash. I predict economic collapse, but it's not necessarily a falling stock market or crashing home prices. It's the consumer. The consumer, look at the consumer. Look at over 60% of people living paycheck to paycheck. People miss a couple Social Security checks. They have to live in their car. That's just one example. I'm sure there's millions out there. Probably people in their 60s, 70s, 80s moving back in with their kids, if their kids have a home. But their kids so loaded up on student loan debt, can they buy a home? It's pretty crazy. It's almost a renter nation. And there was a prediction here that, this will be a renter nation, that people will be renting clothes, renting their cars, and not really own much, right? Oh boy, auto loan delinquencies hit a record high. Okay, we talked about that earlier. Here's one right here. Australia inflation worse than the U.S. And something tells me that they fudged their numbers over there. These are the official numbers, so I can guarantee you these are a lot worse than it's being reported. You can't actually find it in this article, but I did read that it was about 7%, and that's the official number. We're supposedly 3 something percent here in the United States. So this inflation is global. And I like to come back to this because I still see a lot of people out there saying, oh, we need to replace, this guy that's in office with this guy and everything will be fine. No, it's not as simple as replacing somebody. If that was the case, now a few years ago, I used to think that that was the solution. And in fact, I even experimented with putting out some political type of stuff, on a different channel. But I came to the conclusion that it doesn't matter because you look around the world, what's happening. Inflation is global, right? Replacing this politician over here, it's not going to change the way that the money structure operates, this financial system, right? This really fake money created at the click of a mouse on a digital screen. It's not even real money. It's real because it's legal and people can use these digits to buy real things and to take vacations and all those things. But as far as it being real, as far as is it tangible? No, it's just numbers on a screen, and you can type up as many numbers as you want to if you're behind the printing press, right? So this is global. It's systemic, not just here in the U.S. If I thought some politician could change it, I would be out here, maybe doing a political show. So I got completely out of it. There's nobody that's going to come in and really fix it. So all we can do is know what's happening, so we can navigate it wisely, and come out looking pretty good on the other side. So hope you guys like this update. What do you think about all these stories? Back to the beginning, the Fedex warning, but yet we saw record holiday spending over the Thanksgiving weekend, right? So which is it? And the Tesla owners. What else do we talk about today? The BMW DUI people. Do you guys see that with BMW owners? All right, so I hope you guys like this news roundup. We're going to be back with another dose of economic reality very soon. Please make sure you subscribe so you don't miss a report. And we'll talk to everybody very soon. Bye now.